way that you analyze the financial game, if you will. You understand the way the moving parts and the ways to be able to stack them together and put them together and align them in the right way.
You're listening to Alternative Investor Mastermind, where we do a deep dive on alternative investment opportunities and the lifestyle it can create. Join Jack Krupe as he presents actionable tips and tricks in doing passive real estate away from mainstream strategies. Go beyond the usual fix and flips and try less explored yet rewarding investing ventures. From multifamily properties, mobile homes to cryptocurrencies. Do not miss this opportunity to escape traditional assets and finally create wealth without Wall Street. Now your host, Jack.
Hey everybody, welcome to another episode of the Alternative Investor Mastermind. Today we've got a great show. We're going to talk about how to generate leads and reach out to potential clients, build relationships, whether it's through clients or investors. And today we've got an expert, Kevin Bull, on the show. Kevin, thanks for joining us.
Hey, thank you, Jack. Excited to hop on here. I've been following for some time and helping in the background a little bit as well.
Yeah, absolutely. So, let's start off with just having you tell your story, how you got into the business, and just tell us about your path.
Cool. Yeah. So, going back to college, it was like 2011, 2012, and really saw my brother graduate and have a hard time getting a job. Realized I want to start a business while in college and kind of get the ball rolling. Started a couple marketing companies, started making some money. Joined the Entrepreneurship Club, Sustainable Business Club, and that's where I met my business partner now, Steven. And through that, while we were in the Entrepreneurship Club, one of the guys' uncles came in, and this guy Steve with a big old cowboy hat from Texas drops a file cabinet on the table and said, "Can some of you guys help me raise some money for a renewable energy plan?" And so, I immediately jumped on the opportunity. And he rented out an office space downtown where we went every afternoon to be able to take this information from the file cabinet and take our marketing knowledge and be able to put that into charts, graphs, presentations, and then host that on a website to help him raise capital. And through that, was really was enjoying the experience and gave him something that was sleek and professional to be able to present to investors. After working with him, he actually left us with the office space. And the office space is in a great location, kind of in the middle of downtown Eugene, Oregon. We called it Atlantis. And we took out loans against our cars as collateral and turned it into a WeWork type co-working space. So we really just used that as a way to be able to integrate our way into the community. It was a pretty cool setup. It had a couch, a shared kitchen, and then we built out little offices. And through that, we had a Chinese international student group that ended up leasing from us, and they'd hold their weekly gatherings at our event space. So we became friends with a lot of them. And as they were looking to graduate, they were looking into visa options. So we ended up helping them other way. Go thumbs up. We helped them with visa options. I had a little favicon emoji thing pop up.
Oh, okay. Yeah, I didn't know if that's. I didn't know what that was. I didn't touch anything.
So working with them on getting visa options, we became aware of the EB-5 visa program and helped them facilitate those EB-5 investments into some commercial real estate developments. At the time, those were $500K investments. Majority were from Chinese international. Into U.S. Commercial real estate developments, a lot of times hotels and things like that too, because it had to create a lot of jobs. And we learned a lot about that EB-5 investment program and also kind of raising capital from our past venture. And, we were managing a commercial real estate space as well. And so really just we're learning a lot about real estate capital raising from different angles. One of the groups that we help facilitate capital with asked us to join his team to be able to be investor relations and also tech and marketing side of things. So my now business partner and I, as we graduated college, joined his team. And this is right when the Jobs Act 506C was coming out. So we were doing a lot of experimentation online. How do we leverage some of our marketing background to be able to meet new investors? And it was just didn't have much of a budget to work with. It was being really scrappy. working on like Facebook, Instagram, Bigger Pockets, LinkedIn, just connecting with people and hosting monthly events at this kind of winery setup where we have 12 to 15 investors come in, give a little presentation, have some appetizers, etc. And really started to get some good traction and figuring out what was working. So after working in-house at that fund for a couple of years, we saw more people becoming comfortable raising capital online. And so InvesTechs was born. InvesTechs is our agency, was born in about 2015. And so InvesTechs, we work with real estate investment funds, developers, syndicators, and help them raise capital through digital online marketing tactics. And so from 2015 up until just about a little over a year ago, we really just aligned with partners, 6 or 7 investment funds, and we're kind of more of their like outsourced CTO and CMO, really doing anything and everything to help them be able to build their brand, their website, raise capital, build their network of investors. And so we met Jack and JKM a few years ago, and help kind of get JKM launched and rolling, and been working closely with the JKM team for a few years now. And over the last year or so, we saw the growth of the industry. Some of these conferences we were going to started at 100, and now they're up to 1,000 people at the conferences. And so, as seeing more and more people in the industry and becoming comfortable raising capital online, I think part of that was like the pandemic and people having to work from home. People became more comfortable kind of investing from home too. We created a lot more like defined packages and services based on what we've learned from helping a lot of groups. So now we offer, both like a CRM and marketing automation platform that leverages AI to help people raise capital. We offer what we call like a foundation package, which is building out some of your content and like your new investor experience. So every time you meet a new investor, what kind of emails are they getting? What information are they getting as they're getting onboarded onto your company? And then we, our bread and butter and our special sauce is a very targeted meta ad campaign with an AI sales follow-up system for them to be able to book those interested investors directly on our client's calendar. So Jack, I know you already know all this, and I kind of went on a rant, but what do you got?
No, it's great. It's great information, and I've experienced a fair amount of it firsthand. But I talked to a lot of investors. I just recently spoke at the original real estate club that I started in 20 plus years ago, and I know there's so many investors who think about maybe starting a fund or raising money, or they've been doing it ad hoc, maybe taking a private loan. But I know it's somewhat mysterious until you've done it. I know there's always a lot of interest and a lot of curiosity. So it's great content, and we should definitely approach this as from like starting from the beginning. So you mentioned a couple different things at once here. What is the absolute? Is there one strategy that really stands out that's working right now?
Right. So touching on what you were saying is, I think as people get started raising capital, maybe they come from a real estate background or a finance background, and they've started to raise capital from their friends and family, and through that, they've kind of reached their edge of their connections, right? And they're trying to figure out where to go for capital next. People's next kind of step is typically to join a country club and maybe a yacht club and a sports car club and just try to be around other wealthy people, which is a logical next step. I think through that process, some people may feel like they're kind of chasing investors or always chasing the rabbit, if you will. And what we see as like a natural growth, if you want something that's more consistent and scalable, is to be able to leverage digital marketing, right? So any other business uses the internet to be able to meet new clients, new customers, and to be able to build their network. And so what we've seen from successful groups is, they have a solid brand. They make it really clear about what their investment thesis is, what their investment offering is. They have a well-refined offer that they can back up, and they can let investors know why they have that approach and why that approach is a good opportunity in this economy and for those accredited investors, right? They can clearly communicate the benefits to investors. It's really important. Once you have a solid offer, we really see a lot of uh, consistency and scalability on Meta. There's other we've tried a lot of platforms. Google has a very high cost per lead and a low quality of lead. It just really doesn't work in this industry. We've tried Reddit to like very specific groups. Reddit's really frowned upon in marketers in general. It's just their ad platform is very janky and kind of outdated. Um, LinkedIn can be effective with like targeted direct outreach, but it's just kind of limited in the scale there because they have a lot of limits on kind of what you can do for reaching a volume of investors. Um, LinkedIn ads as well are just known for having a higher cost per click. You might get a good quality lead through it. So it just LinkedIn can be effective if you really know, like if you're going after doctors or you're going after software professionals. Like if there's a very specific job title, then LinkedIn can be okay to pursue. But when you're talking about Meta includes Facebook and Instagram, right? Um, it's just well respected by marketers as being the best platform to market on. I mean, it's the oldest, it's the biggest, it has the most users. It also has the oldest demographic of users as well. So when you talk about people with high net worth, they typically are over 45 or 50. The data backs that up. And so, Meta allows you to be able to target those people really effectively through their platform. And we've developed a very specific strategy. We kind of call it our secret sauce, the way that we're able to target those investors directly on Meta. And I can speak on that if it's time to go into details. But
Yeah, I think I mean certainly as much detail as you think is is helpful.
cool. Well, yeah. So on Meta, when you're looking to target investors, typically they'll give you like an interest-based targeting, right? So does this investor like frequent international travelers can be a decent one. Are they into financial investing advice? Are they a real estate investor? And so you can use these kind of like generic targeting through Meta. Where we've really developed a special sauce is we've invested a lot into different databases and data scraping technology and third-party AI leveraged softwares that allow us to be able to build out an investor prospect list based off of people that are part of certain communities online, and then we can upload that list into Meta and be able to target those individuals directly. And so it allows you to be very specific with your targeting, and also be able to use that ad budget really efficiently to a lead that we believe is accredited, is interested in investing in a private real estate online, and so that really allows you to be able to be a lot more efficient, if you will, right? And then when that investor is just like either on their computer or on their phone scrolling through Facebook or Instagram, now you have your ad right in front of them, right? And so they click on that ad, it immediately pops up a form that asks them for their contact information, asks them, are you a accredited investor with the definition? What's your potential investment amount? And then we submit that form. You have a very qualified lead that then we're now working to convert into a call, both through like a landing page with a video, and then also that AI sales assistant is reaching out via text and email to immediately engage with that lead. That speed to lead is really important. You always want to kind of get that lead when they're hot. And then, that AI will go back and forth to be able to get that call booked directly on the client's calendar. So it allows that fund manager and syndicator to not have to chase these leads as much, and let them come to them and really attract those investors directly to their calendar. A lot of people don't like running ad campaigns because it's a numbers game, right? Like you generate 100 leads, you're hoping that if everything's optimized and running well, that 20 of those will be accredited and book a call on your calendar. So if you're not leveraging something like AI, then you have to call and text and email those 100 leads every day, right? And be able to be very diligent on following up with them. But we allow AI to really do all that work for you and kind of be an extension of your team. Doesn't eat, doesn't sleep, doesn't call in sick, just constantly reaching out to those investors on your behalf. So it really allows you to be able to more efficient, save time and energy, and be more effective on getting those calls booked.
That's really, really great stuff. And AI is just so fascinating. There's just so many different use cases, from the standard just chat GPT generated content to I was playing around last week with saying create me a meme that showed a picture of a tired landlord, and it created somebody holding their head. For those on YouTube, is a landlord with his head in his hands and behind a crappy looking house. So it's pretty amazing what it could set up.
Yeah, it's good. Yeah, to that point, I mean, we use it in everything we do, and we leverage it for every aspect, for copywriting, content creation, ideas. We do it more for ideas on the graphics and videos, and then we do have a designer that will kind of bring that to life. But it definitely helps us generate some stock images, some stock videos, and then like through the campaigns, like obviously Meta is leveraging AI for all their data and optimizations, but we also use third-party tools that we connect into the accounts that give us even more detailed insights and weekly reporting, and it'll give you like tips for optimization. And so there's just so many tools, whether it's like from the content, the copywriting, or if it's from the data, analyzing data perspective, that you can leverage now for marketing. I think AI really, like, everyone thought it was going to take over these like manufacturing jobs, but it's really been really effective for marketing and sales, and being able to just be a lot more efficient there, and just be able to handle a lot higher volume than one person can.
Yeah, absolutely. I'm excited to see how it continues to develop, and certainly excited for my NVIDIA stock. Wish I bought more.
Yeah.
So you've worked with a lot of different groups raising capital, from private funds to syndicators over the last number of years. What do you think the secret is to the successful ones?
Right. I mean, it is more of a holistic approach. I think there's a lot that comes down to that, like that first impression, like having a really solid brand and a well-defined offer. And at times that can be difficult because the economy shifts, and so it might have been good to invest into that asset class and that strategy a few years ago, and now things are shifting, and so the investor sentiment changes a little bit, and we see that. You obviously, everyone kind of sees it. So some of it comes down to timing too, right? Like if you have the right offer and setup, and the economy kind of shifts your way, it can be helpful and effective. But yeah, it's what I call it. It's market message match. It's really something that I've been trying to nail in on lately, where you want to really understand your market and who are your investors. You want to understand the economy and the markets that you're operating in to invest into. And then you also want to match the messaging with that, right? So you want that messaging to really bring together your investors, the economy, and why that's effective, and be just like really simple and clear. And if you can hit that on the head, sky's the limit. I mean, when we run our campaigns, we do a lot of different variations of copy and content. We test those out, and I work directly with the clients on kind of developing that offer and how are we going to present it. And instead of saying like just like 12% returns and monthly distributions, XYZ, kind of that standard tombstone bullet point of what you're offering is, we're saying like invest $250K and receive $2K per month in monthly checks, right? Like kind of do the math for the investor. One thing we've done in the past is like things about like other investing options, right? So like compare it to stocks and bonds, and how real estate, is secured by real assets, and maybe reference like how wealthy people invest into certain assets because of tax advantages. There's all different angles, right? Like pick your angle and lean into it. And if you have that angle, like justify your thesis, right? Like if you're going to make a statement, then you got to back it up and have those bullet points and be ready for those questions and basically answer the questions before they have it.
Yeah, and that's a really great point. And as someone who's been in real estate a long time, I think sometimes I speak at too high of a level. And even what I've realized is a lot of smart, sophisticated, successful business owners or investors, they may know one part of the business. They may know stocks like the back of their hand, or they may even have owned real estate themselves, but had never done a private real estate fund or syndication. So they don't know some of the terms and some of the structure and cash flow of these private real estate deals as opposed to REITs or as opposed to just owning something themselves.
Right. Yeah, that's a tough one. Is because like if you're being too broad and kind of elementary, you might not get the attention of the sophisticated investor. But also in marketing in general, you kind of want to assume that people know nothing. I mean, business owners can make millions of dollars through a trade, blue collar type business, and may not have any experience in real estate or much financial investing knowledge. So it is a tough balance there. And we do always try to find that happy medium, and it depends on who your target investor is, right? So you got to speak their language. What do you see from that point of view of like, what do you when I mean, Jack, I've always been really impressed by your market knowledge and your understanding of taxes and kind of playing the game. You play the game at a very high level, and I think that when people talk to you, they understand that very quickly. And I've heard you go on rants about everything from the ways that you're navigating taxes and a hotel, flight points, and all these things. But how do you kind of distill that down when you're talking to investors for the first time? How do you kind of show your knowledge without kind of like going too deep into it? Is there a certain approach there?
It's a great question, and I don't know that I have the perfect secret sauce for that. I really just try to ask a lot of questions to make sure I really understand the investor's needs. I may think the investor wants to save on their taxes. I think almost everyone wants to save on their taxes, but what's the real reason for that? Is that because they're anxious about their retirement and they're looking at maybe trying to retire in 5 years, and the difference between having a tax efficient investment and a not tax efficient investment may mean they could retire a year earlier? So I really, and that's similar to any sort of sales or any sort of just relationship building. You want to lead with value. So I try to understand the problem as best as possible. And I try to, I've always been that evangelist. So I kind of can't help myself with like throwing out ways I think I could help. And then, the key is, can I hone in on what's really the best help and what's just, somewhat relevant or even, interesting to know information, but not really something that's gonna solve their problem. So that's what I try to hone in on, and and otherwise I'm just I just am myself. I know I'm not everybody's cup of tea, but fortunately from the amount of content we've put out and the network I've built, I'm generally following a lot of the stuff that you've helped us with over the years, and then just trying to be consistent with putting out content. People are coming to me now, which is great, and sometimes for what I don't even expect. A recent acquaintance of mine from high school reached out. I guess he'd been following for a while, and I didn't even know. And then turns out we're both points and miles connoisseurs. So, I posted some personal stuff about just like using points and miles to fly business or first class. And, that started up a conversation. We hadn't talked in probably 20 years.
Welcome back to Jersey, right? Nice.
Exactly.
Yeah,
exactly.
It's interesting when like kind of working on I know you've done a lot on your personal brand, and I see it when we're at the conferences together that like people recognize you and know kind of what your specialties are through that, and it's tough as a personal brand. It's tough to be like for anybody and everybody, right? But you can only be yourself, and so what you're knowledgeable about, and it might not obviously like the airline miles might not be completely relevant to investing with JKM. But I think it does. You talking about that and showing your knowledge shows the way that you analyze the financial game, if you will. You understand the way the moving parts and the ways to be able to stack them together and put them together and align them in the right way.
Yeah, absolutely. I think points and miles to some extent, it's, people that tend to do a little bit of trading, people who play poker, not everybody, not everyone who invests, gambles, but I think poker is a little different than regular gambling. There are plenty of professional poker players and plenty of successful poker players. So, it's, I think a lot of those skill sets, that analytical part of the skill set. And, although I think real estate is less risky than than the stock market. I think just people that are willing to take a step out of the mainstream, to some extent may be either a little more adventurous or have a little bit more risk tolerance, even though I think once you really analyze it, I think it's far less risky. You have more control if you take those steps to do the proper due diligence and network and find yourself these under the radar opportunities. It's overall a better investment strategy.
Right. Yeah. I've dedicated everything to real estate investing, and I think that the advantages of real estate just outweigh the stock market so much. I mean, if you can align with the right partners within real estate, and they're smart about the way that they secure, they put together their capital stack and secure the property, and there's you can limit your risk, and you can definitely have a lot of upside. And if you're with the right people, I think real estate is a lot better game to play. The market is just so out of your control, and it's been proven that people that just invest into S&P 500 and typically are better, are outpacing a lot of the hedge fund managers. I mean, that's what Warren Buffett continues to say. But I don't feel the same way about real estate. I think that within real estate, if you invest with a successful manager, there's so many different strategies within real estate, and it's a lot more inefficient market that creates opportunity. And so those managers that have the right connections and the right strategies and the right understanding of how to execute, the right team to execute, they really have a lot of upside. And I think there's a worlds of difference if people are talking about investing with a real estate fund manager with a very specific strategy, or a hedge fund manager, or I should say like more of a stockbroker type financial advisor. There's just so many more tools that the real estate investor manager has to be able to take advantage of that inefficient market.
Yeah, you hit the nail on the head right there. And that was actually, we took a value investing class in business school, and the professor had studied at Columbia under Joseph Stiglitz, who's world renowned, and I think he had studied under Ben Graham, or it's literally direct lineage to Warren Buffett. And a couple things that came up. Since the 80s, Berkshire Hathaway has actually had higher returns on their private equity investments than their publicly traded stocks. So part of the reason Berkshire is beating the market is because they do a lot of private equity deals that had higher returns. And the other thing you said is, and you said this perfectly, the more inefficient the market is, the more likelihood you're going to find people to consistently beat the market. And these private placement, private real estate funds have really only been legally allowed to advertise for 14 years. And it took a couple of years to get going. And it really took social media and the prevalence of people communicating more on social media to take these deals outside of the country club and into into access for mainstream accredited investors.
Agreed on your first points. And your second point, the Jobs Act or 506C, where it allows people to be able to publicly solicit, aka digital marketing, was rolled out, I believe, in 2012 officially was when it passed, but then it rolled out in 2013. A lot of people didn't understand it for a few years. And so I'd say like 2015, 2016 is when a lot of people just kind of started to grasp it and understand the opportunity. And then there was a little bit of a wave then. But then when you look towards the pandemic, I feel like it kind of became a necessity for a lot of people. They had a hard time, getting out the house and being in those communities. And, they started to realize that they needed to do more online, like we all did in any job, right? But there was an interesting effect in the industry of like the work from home also translated to the invest from home. And I think over the last few years, especially, a lot of investors are becoming a lot more comfortable with, seeing an ad on Facebook or Instagram. They probably see 10 or 20 a day now with it. It's just a lot of funds are doing it now. So, they have now their selection of different offerings, and they find something that intrigues them personally because of their personal situation, whether that's their tax situation or if it's something about their lifestyle, retire early, or it's something about the cash flow or monthly distributions, right? Something about your offer that speaks to that individual person. They see it, they click through, they get more information about you through, your landing pages, your videos, all the information you send them with executive summaries and pitch decks and webinars and things like that. And they consume your content. They start to learn more about it. They start to, get more comfortable, and they start to trust you as a person, as kind of a thought leader, that they now, they know that you as the fund manager know what you're talking about, and they start to trust you and your knowledge to be able to manage their money. And it's how we buy everything online now, right? I mean, you see an ad for a pair of shoes, you go to Amazon, you kind of you look at all the pictures, you look at, you read all the reviews that they have, how many star ratings do they have, like, it's just how people now like to be able to research and find things and be able to kind of make their own decisions. And I've really seen over the last few years, there's the investors' behavior has changed a lot, and really become comfortable with this investing online approach.
Yeah. So it sounds like, although it's been around for 14 years, we're really at the tipping point of adoption. It reminds me a bit of online dating. I got on the internet in the early days. I was on Prodigy in 1997. Back then, if you try to find a date on the internet, you'd probably find someone with like a glass eye or a peg leg or something. And now it's like, apparently the younger generation, it's sometimes people are shy to even go up at bars because you're not used to breaking the ice in person.
Yeah, that's changed fast. There's actually a few groups that actually try to create kind of like a Tinder for real estate investing. I've seen like 2 or 3 companies popped up that try to take the dating model app into investing into real estate. It never really took off. It's definitely kind of a hard business model, but that's the industry's changing, right? There's different like platforms that you can list on. A lot of them are really selective about who they allow to list. There's different models out there, because it is right now, as an accredited investor, if you have a lot of wealth that you want to place into real estate investments, right now it's on the fund manager and the company to put themselves in front of that investor. And sometimes it can be a little difficult for them to research and get past some of those bigger names to some of more of those kind of boutique and specialist type of firms. So there's going to be a lot more evolution in the industry, and it's interesting to see how it plays out. And I think that it'll continue to cater to that investor, because you always, industries begin to continue to cater more and more towards the customer.
Yeah, I couldn't agree more. It's really, really great stuff, Kevin. Thanks for dropping so much knowledge. If people are looking to get a hold of you, if people are looking to try to grow their brand, generate more leads, where do they find you?
Right. So company's InvesTechs. So InvesTechs.com. That's InvesTechs.com. And then you can also reach me at Kevin@InvesTechs.com. I'll even give you my cell phone number. My cell phone is 503-539-8014. So you can shoot me a text. And I'm happy if you're interested. Have any questions about marketing or lead generation, reach out, and happy to help.
Great. We'll put everything in the show notes as well. Kevin, thanks again for coming on. I'm sure we'll be chatting. We chat regularly anyway, but great stuff, and we'll hopefully do this again sometime.
Well, thank you, Jack. Really appreciate it. And everyone thanks. Game as well.
Yeah, thanks for that shout out. And please remember to like and subscribe on iTunes, Spotify. We have a YouTube channel at JCAM Investments, and connect with me personally on all major social media. Thanks. I hope you enjoyed the episode.
Thank you. Thank you, everyone.
That's all for this episode of Alternative Investor Mastermind. Now that you know the many alternative opportunities out there all up for the taking, you can finally become ultra connected and ultra wealthy. Get more valuable advice from the experts by subscribing to the show at AlternativeInvestorMastermind.com. Become a winner in the world of passive investing today in alternative investment strategies. Thank you for joining us. Until next time.